Hey friends, welcome to FX Yogi. In today's video, let's learn how to use pivot points to measure market sentiment. There is one other way to incorporate pivot points into your forex trading strategy, and that is to use it to gauge market sentiment. What this means is that you can tell whether traders are more inclined to buy or sell the pair. All you would need to do is to keep an eye on the pivot point. You could treat it like the 50-yard line of a football field. Depending on which side the ball, in this case price, is on, you can tell whether buyers or sellers have the upper hand. If the price breaks through the pivot point to the top, it is a sign that traders are bullish on the pair and you should start buying the pair. Let's take a look at a chart of GBP USD. In the chart above, we see that the price tested the pivot point, which held as a resistance level. Next thing you know, the pair keeps going lower and lower. If you had taken the clue that price remained below the pivot point and sold the pair, you would have made some nice mala. GBP USD dropped almost 300 pips. Of course, it does not always work out like this. There are times when you think that forex traders are bearish on a pair, only to see that the pair reverses and breaks through. How forex traders feel about a currency can shift dramatically day to day, even session to session. This is why you cannot simply buy when the price is above the pivot point or sell when it is below it. Instead, if you choose to use pivot point analysis in this way, you should combine it with other indicators to help you determine overall market sentiment. That's all for today. Let's catch up in the next video with more interesting content. Until then, take care. Bye-bye.